Welcome to C Crypto Daily Buzz. Today we break down three big stories for Southeast Asia investors: ETF outflows, Goldman Sachs' crypto exposure, and the reality of stablecoin remittances. Stay tuned for clear, fast insights you can use. Hello everyone, this is C Crypto Daily Buzz. Today is February 12th, and I picked out three crypto stories that I think matter the most if you're investing from Southeast Asia, especially the Philippines, Vietnam, and Indonesia. Instead of just staring at price charts, let's look at where the money is actually flowing and how the real-world infrastructure around crypto is changing. The first story is about Bitcoin and Ethereum spot ETFs flipping back to net outflows, and the market slipping into what I'd call maximum fear mode. Recent data shows that US Bitcoin spot ETFs saw large net outflows again in a single session, after only a short pause in selling. Major issuers all reported money leaving their products, which tells us institutional demand has cooled off in the very short term. Ethereum spot ETFs also turned from several days of net inflows back to net outflows, with one of the largest products seeing the biggest single-day withdrawals. On top of that, one of the popular sentiment indicators, the Fear and Greed Index, is now sitting at an extreme fear level, near the lows of this cycle. In the short term, when ETF money is leaving, volatility usually gets more violent, not less. But historically, these extreme fear zones have often lined up with good accumulation areas for patient investors, not the top. For Southeast Asian retail traders, I think the key is this: don't only look at your local exchange order book. If you also watch ETF flows and sentiment indices, you can better tell whether this is just emotional panic or a real structural exit from crypto. The second story is about Goldman Sachs and how differently big institutions behave compared to retail. Even after this brutal drawdown, Goldman is still sitting on roughly $1 billion worth of Bitcoin exposure through spot ETFs, according to recent filings. They're not holding coins directly. Instead, they own large positions in regulated spot Bitcoin ETFs. What's more interesting is that Goldman also holds exposure to altcoin spot ETFs, things like Ethereum and other large caps, showing they are not purely Bitcoin only in their strategy. So while retail investors are rage quitting, a firm like Goldman is quietly maintaining. My personal takeaway is simple: when the market drops 40 to 50%, most individuals think it's over. The big players, though, are thinking in terms of portfolio structure and long-term exposure, not just this week's candle. If you're in Southeast Asia, I wouldn't just copy Goldman's trades, but I would at least pay attention to what these filings say. They show that, behind all the fear, there are still institutions treating Bitcoin as strategic assets, not temporary memes. The third story is about stablecoin remittances in Africa and why the always cheap narrative doesn't always match reality. One analysis found that the median spread when converting stablecoins into local fiat was around the low single-digit % range, the highest among major regions. For comparison, the same study put Latin America much lower and Asia close to near zero median spreads in some corridors. In certain African markets, especially where one provider dominates, spreads could spike into the double digits. Personally, I think we should always ask, how competitive is this market, and how transparent are the fees? If you found this video helpful, please subscribe, hit the like button, and turn on the notification bell. Thanks for watching, and see you in the next video.